Hello and welcome to another daily market update by Market Intel. Today we want to take a look at the Fantom chart, FTM. In the last video I mentioned to you that if there is the opportunity, if there is the possibility, we're going to put a trading area onto the chart. Now we've done that, so let's take a look at the chart. Let's go. Okay, we are on the Market Intel website, dailymarketupdate.com. You can find the link in the description, then you can get access to all of these updates if you register for free, if you choose to do so. I think it's a no-brainer. We click on the cryptocurrencies section, and here we can select the Fantom charts, the Fantom analysis. There's a written update, and then obviously here the chart update. What we want to take a look at first is the weekly chart, and then we take a look at the 4-hour time frame. On the weekly chart, we can still see that the current thesis is that wave 2 bottomed recently. That's a larger degree wave 2 correction, typically the end of a larger bear market or a large correction. Typically afterwards, a third wave rally would follow, and the third wave is the strongest element of a trend. Now, the ideal targets here for the third wave, they start at $8.30. Now, you can see we're currently hovering around the 70-cent mark. That gives us a really good reward to risk ratio. Now, obviously, they are not really set in stone, those targets. They are moving targets until we get a little bit more price action on the smaller time frames. It's a mathematical projection, but it shows what is sort of reasonable as an expectation should the market really follow through with this bullish scenario. Now, you can see that the $3.68 level marks an important level on the weekly chart. It's an important long-term level that, if broken, could send the price higher into the $8.30 range. But that needs to be broken first. Now, let's now take a look at the 4-hour chart to get a little bit of a better idea of the microstructures. Here we are on the smaller time frame, and you can see that a wave 2 bottomed in August this year. That's the current thesis. You know, that is where I said, look, this is the wave 2. This is where we ideally would see now a wave 3 start to the upside. Now, what we really need to see is a little bit more price action that would confirm that further. Especially a break above the March high would be good. But there is more stuff that can happen in the very, very short term. For example, what we're tracking here are two scenarios on the micro level. Now, the first one, and that's currently the primary scenario that we see with a 61% likelihood or probability, we've assigned that. It is, first of all, a scenario that's overall valid as long as we're holding above the 26-cent level. Now, to be fair, we should really hold above the wave 2 low from September because any break below that will invalidate the bullish 1-2-1-2 structure. So you see the green wave 1, which is wave 1 of a larger degree third wave in orange. It topped in September, and we could be in a wave 2 now in a so-called flat correction, where we've seen a 3-wave move down in wave A into the October lows. I think it was around the 3rd of October. Then a B wave rally that did overshoot and topped at 79 cents. And now we could be moving down in a C wave. And this is the trading area we're watching. We know that a wave 2 should typically reach the area between the 88.7 Fibonacci retracement and the 50% retracement, in this case between 39.8 cents and 53.9 cents. This is the Fibonacci support area. There are additional levels like the very important 61.8 retracement, the golden ratio level at 49.6 cents, or the 78.6 Fib level at 43.5 cents. So as long as we're holding this area, the focus can be on higher prices. And that would be either a wave 4 internally or a wave 2. Now, as I said, the preferred interpretation is that this is a wave 2. It should go a little bit deeper. If it's an internal wave 4, it might have already bottomed and we go higher more directly to fulfill a 5-wave pattern. We only see this with a 39% likelihood, but a break above 79 cents would confirm that further. And if we form these 5 waves to the upside, well, that would again then we can consider that another wave 1, just a larger degree, 1, 2, 3, 4, 5. And then this would be a wave 1, and we can then expect a wave 2 afterwards. So either we go a little bit lower now, hold the green support area and go higher then, or we go a little higher first and then see the pullback. But in both cases at the moment, we are bullish on the Fantom chart, bullish about the Fantom chart. And that's our perspective. We need further confirmation then, you know, as long as the price holds above the trading area, a break above 79 cents would confirm further the bullish expectations. That's the update about Fantom. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, please register completely for free on our website. You can get access to the dailymarketupdate.com membership section. It's completely free, and then you get access to all of these Elliott Wave updates, not only for cryptocurrencies. We also publish updates about stocks, tech stocks, the S&P 500 if you're interested. And have a great day. Thank you very much. Bye bye.